What is up, everybody? Welcome back to another episode of What the FICC. What the FICC, man? I am Spencer Israel. That's Ian Cully. He's the head of FICC at All Star Charts. Ian, what's doing, man?
Man, happy Fed Wednesday, Fed Day.
It is, of
You,
course, a
are you,
Fed day.
you excited?
Um, Excitement's a strong word. I am a little. I would say I'm curious. I'm curious. I'm not excited. I'm never really excited for the Fed. I'm usually curious. Mostly just not so much with what they're going to do. We know what they're going to do, which is nothing. But it's about the press conference after. What does he say?
Right.
And if you watched the morning show this morning, you know the keywords to look out for. So, we will get some macro news in a couple hours here, but let's not talk about that, Ian. Let's talk about something that has not happened in 33 years, give or take, 32 years, 31 years. I'm not quite sure exactly. And that is the Japanese yen has not been this low against the dollar in my entire life, basically. So what's up with that, man?
Well, it has a lot to do with the Bank of Japan's yield curve control policies. Basically, they're trying to keep the 10-year yield, their benchmark, down around zero. And steadily over the past couple of years, they've been giving it a little bit of wiggle room to the upside. At first, it was quarter point here, and then they moved that ceiling up to half. And earlier this week, they said they were willing to move it all the way up to 1% or 100 basis points. Interestingly, the market didn't really seem to think that was enough. They look around, they notice that the interest rates continue to rise around the world rapidly. We've had this explosive rise, especially here in the U.S. recently, and they just think it's enough. Because since the Fed started to hike last year, the main fundamental driver for the FX markets has been interest rate differentials. So as the U.S. yield continues to rise, but Japan keeps their yield close to zero, the yen's getting crushed. And we saw that yesterday. We saw the yen getting crushed not only against the dollar, but against the euro and against the pound as well. And Mexican peso, you just pick any currency, and the yen was tumbling yesterday.
Right.
This is kind of where it starts.
So why do we care about the performance of the yen?
Well, in terms of the market environment, the cycle that we're in right now, or the stage of the cycle that we're in right now, the U.S. dollar yen pair, the U.S. dollar index, and the U.S. 10-year yield have been moving in tandem. Right? They've been moving very closely. I wouldn't say tick for tick, but pretty close over the past 2 years. So now, 10-year yield broke above its 2022 peak earlier in the fall. Dollar yen just took out its 2022 peak yesterday. Is U.S. dollar index next? And I think that's a really important question to answer, because the dollar is a huge headwind for risk assets, specifically global equities, both inside and outside the U.S. So stronger dollar, the dollar plays catch up to the dollar yen and the 10-year yields, and we're going to have a problem. We're going to have a problem for global equities. And here's the MSC All Country World X US ACWX ETF. And you can see strong negative correlation between the two. See how the dollar has been bouncing higher since that failed breakdown in July. ACWX has been catching lower. Similar picture with the MSC All Country World Index, all inclusive ACWI, What's the U.S. stocks in? Again, similar picture, not quite as negative of a correlation, but still negative. Still something
So
we want to keep our eye on.
so this is a signal that other currencies, not the dollar, are getting weaker, or that we should watch for them to get weaker, or what?
Yeah, I mean, this is a signal that we should watch for continued dollar strength. That's
Okay.
I mean, and there's plenty of ways to play that. You could, get long the dollar yen, you can short the euro, we get shorting the pound, and get short the Aussie dollar, the Kiwi, Canadian dollar has been struggling too. There's a lot of ways to play it. Today, I just wanted to focus on the yen, and because the yen's breaking out to 33-year highs, so it's taking out that 150 level. It's where can we set some logical targets in the near term? Where can we set some logical targets longer term? And what do some of the other currencies look like versus the yen? It's kind of what I want to cover today.
Yeah. So let's pull some yen charts, and then just one more. Is this more, you think? Is this an indictment of the yen, or just a tip of the cap to the dollar, or both?
Tip of the cap to the dollar, an indictment
Okay.
of the yen. I look at it as the market rejecting the Bank of Japan's 100 pip level, 100 basis point level. I see it as the market embracing a rising rate environment, and the idea that rates could go higher from here. And if the Bank of Japan wants to cap the 10-year yield at 1%, the yen will suffer. It's already starting to suffer. But hey, maybe we get a failed breakout here. Maybe we get a failed breakout, and the dollar begins to tumble versus the yen, and the Fed comes out and they're done hiking, and gold starts ripping, and it's a completely different environment. But for right now, this is what we're looking at.
I thought the Bank of Japan did do away with the cap on the 10-year yield.
I thought they loosened it. I didn't think they
okay. Yeah, they loosened it. Yes. Okay, that's probably a better way of describing it. Is
if they did away with the cap,
yeah,
I think we would see the Japanese 10-year yield catch higher and the US dollar yen collapse.
Yeah.
I mean, that's my guess.
Let's pull some long-term yen charts and or yen dollar charts, or dollar yen, whatever you want to say, and then tell us how you would play this here.
So, near term, I want to see it. I want to see it back above. I want to see it hold above 150. If it's holding above 150, there could be some near term resistance up around 150, 150. We saw that action yesterday, and it's kind of halted up there. But above there, I think our next logical targets up around those 1990 highs, around 159.50, 159 and a half. Those that's the level. I mean, last time we got up to 159.50, I mean, the Bank of Japan did step in, and took action. Dollar yen collapsed. So I think this is a logical place to see potential intervention by the Japanese government. We'll have to wait and see. But that's my first line in the sand.
Is the one line that we're at right now, basically.
Yeah. So I mean, around 150. As long as we're above 150, I think the path of least resistance is higher, up towards 152, kind of in this, we'll see what happens. Let's see what happens today. Let's see if we can take out that level. I'm trying to pull up a chart here. Struggling getting into, here we go. All right. Yeah, so it's above 150 today. It's pulled back a little bit, but it's still above 151. So if and when we get a decisive close above 152, I'm eyeing 159.50.
And where's that 159 from?
That's that 1990 peak.
Oh wow.
That's
so
the 1990 peak.
So this chart goes back to what, mid 90s right here? Is that what we're looking at? Mid 90s. Okay. Yeah. So the dollar yen peaked when the Japanese stock market peaked, right? Or maybe the dollar yen didn't peak. It's not at the all-time high, but it peaked for that moment, right?
Yeah, that's a really good point. And on our call earlier today, our analyst meeting, we're talking about what international equity indexes outside the U.S. look good, and Japan was the first name I heard. And there's actually a pretty strong correlation between Japanese equities and the dollar yen. In a true risk on environment, dollar yen's catching higher. Now it's the recent rally over the last year and a half to 2 years is largely been driven by the rapid rise in global interest rates and the lack of a rise in the Japanese rate because of their yield curve control policy. Say that 3 times. So it'll be interesting to see if we can get an honest to God risk on rally here in this cross that coincides with the bid in Japanese equities.
So this is interesting because much was made of the fact that the Nikkei, Japanese main stock market index, finally after 30 years finally got back to its I guess all-time high. Yeah, all-time high, which was made in 1990, and it finally got back there. What was it, last year, I think, or maybe even this year? That may have been this year. And what you're saying is the last time the dollar yen was at 159, that was also the last time the Japanese stock market peaked. So really what we're saying here is, based on history, we could be near the end of this rally. Sounds like what you're saying.
We could. It's possible. It's possible. I look at it more of, hey, this is a logical area of potential resistance, a logical area of supply, a great place to feed the ducks. I don't want to get too into it and get ahead of myself and pour too much into the potential implications behind what the dollar yen, a move higher in the dollar yen brings. But I'm looking from a trading perspective.
Right.
159.50 is a level that we want to keep our eyes on if we're long the dollar yen. And it is also a level we want to keep our eyes on in terms of a potential inflection point that could have broader implications.
So you would just like you would go long dollar yen above 150, 151, you would short it below that. Is that fair to say?
Ooh, that's a good question. I like to see a little bit of some sort of pattern. Some sort of consolidation before getting short. So I would need to see a little bit more to get short. But if you wanted to take a swing at the short side, and treat it as if it were a potential failed breakout, can definitely take a shot below 150 maybe say 149, putting a stop above the high here. Or you can wait until it drops below 146, 147, somewhere in that range. But I'm not really looking at the yen as it prints fresh 33-year highs or 30+ year highs and devising a strategy to get short.
Okay.
You know, does that make sense?
Yeah. Well, basically, what it comes down to is just because you're not buying something doesn't mean you have to short it, right?
No.
That's the takeaway that I got.
Yeah.
Do you have any Fibonacci charts here?
I do. I got a couple of I got an extension level here. This is a longer term objective. You might think, wow, man, 175, Ian. Come on. Get out of here. That's crazy. That's crazy. What's interesting is that this level coincides with a key pivot low from 78, all the way from 1978. I don't have that data on these charts, but if you go to TradingView and use FXCM as a data provider, they have a much longer historical record. It goes all back to the 70s. Anyways, interesting to see that extension level lines up. The fact that price has respected these extension levels, the 261 up here around 147, also the 129.50, this 161 down here, it just adds to my conviction in this 175 level. And I also thought it was very interesting that it hits right around that 78 trough. Another level we could look at. You're looking at the monthlies. We did get a fresh batch of monthlies.
We did.
So yeah, maybe 187. We'll see. But the yen has come a long way in the past couple years. And these are some pretty far out targets. But I think that the last year and a half has shown us that this thing can move. And if the environment remains the same, if the Bank of Japan continues to keep a lid on their 10-year yield or just yields in general, while yields continue to rise around the world, then there's no reason why this dollar pair can't continue to catch higher.
All right, let's look at some more intermarket stuff here because dollar yen is what was it, 13% of the dollar index, right? So let's look at maybe some dollar index charts and try to understand how this relates to other markets.
Right. Yeah. So dollar index has been ripping, 11 weeks in a row recently. Now witnessing a potential bull flag, a bullish continuation pattern here above a form of resistance. So we have polarity 101 coming in, form of resistance turning into support at a key retracement level, trying to break out today. It'll be interesting to see what happens after Powell speaks and into Friday. But dollar looks strong. And again, if the dollar's catching higher, that's a headwind for global equities. And that's the real story here, is that we're continuing to see a lot of the trends that were taking place last year just are intact. And yeah, you gotta give the dollar bulls the benefit of the doubt. And the path of least resistance remains higher for the dollar. I look at the S&P 500 futures, and I see it a topping pattern, head and shoulders top, if you want to call it, breakdown, retest around that 43.70 level, and undercut the lows around 42.35, and now maybe we're getting a retest today. And then it continues lower towards 40.50. But that 4,200 level is a big one. It's a big one.
If you've been watching the morning show the past couple of days, there has been a divergence of opinions as far as the bullishness or bearishness of this market. particularly the U.S. stock market. That's what I'm referring to. We maybe will get some clarity with that from the Fed, or the Fed could influence that direction a little bit today or tomorrow. But there's reasons to be bullish and reasons to be bearish, and that's what makes a market, but also that's what makes a divided market, right? And that's what this market appears to be.
It is, and
So,
it's funny, like, tune in, and I often find myself aligning with Steve's viewpoint.
I'm also on Steve's camp right now for what that's worth. Not a whole lot, but yeah.
But JC makes good points. JC makes some really good points, and again, I think that speaks to the messy environment we're in. But S&P 500, 4,200 is a big level. We've been talking about that level for a while. As of right now, it's above that level, 42.25. Maybe get a little bull hook, a little shakeout. Maybe this is a failed breakdown. I don't know if I call it a failed breakdown, but like I said, bull hook, near-term reversal pattern, and the S&P 500 starts catching higher. We'll see. We'll see. But I also wanted to share a couple of yen charts besides the US dollar. Here's the euro yen.
Not at 33-year highs, but at
not 30. Yeah, not 30-year highs.
15-year highs. Close enough.
Yeah, close enough. It's catching back up towards those 07 highs, 08 highs. And I remember, I wrote a post about this chart a year ago, maybe, something along the lines of, the yen provides the base, and I can't believe that the euro yen's actually running up towards 170 right now. Same thing with the pound. I mean, look at this big base in the pound, decade plus downtrend line violated. And it's catching higher up towards 200. It runs it all the way back to 247. So imagine if the pound is running it back to 247 versus the yen. Then in that environment, maybe 175 doesn't seem that crazy.
Okay.
Yeah, I don't know.
All right. So what is the overarching takeaway we should have here with regards to the yen, or the dollar yen, or just currencies at large right now?
I think the overarching, there's a couple takeaways. One, FX markets seem to point towards higher rates for longer, which that's been the mantra for a while now. Yen's going to suffer in that environment as long as the Bank of Japan continues to cap interest rates. If that continues, if this trend continues in this direction, then the dollar is also likely catching a bid. And if the dollar is catching a bid, then risk assets it's likely to come under increased selling pressure, at least at the index level, which, we don't have to trade the indexes. And JC is going to get into that tonight with the monthly strategy session. And he's going to dive into all the areas of the market that we do want to lean into, those pockets of strength that you just don't have access to when you're only trading the index.
Yes, and I should mention that strategy session is not normally open to the masses. Tonight it is 6 p.m. Eastern time. I just dropped the link in the chat. If you want to attend, stop by. You're free to. It is free. Like I said, not normally free. Tonight it is free. I think for the first time in like a year and a half. So check it out. Question from the chat. Speaking of chat, good one actually from One Hole. Because everything is interrelated, right? So you've got a strong dollar. So Ian, how are commodities so strong in the face of a strong dollar?
I think that has a lot to do with interest rates. Commodities are inflationary assets. And again, the dollar strength, at least over the last couple of years, has been tied to the aggressive hiking cycle. It's tough. Like usually the dollar and commodities trend in opposite directions. They're negatively correlated, but that just hasn't been the case. And again, that has to do with the Fed. And it's look at the dollar yen. I mean, that's basically that's the rally that we're seeing in the dollar yen is the hikes. The hikes by the Fed. It really started to take off. Early 2022. And then we noticed that, the pound, the euro, other currencies losing ground versus the dollar, losing key levels versus the dollar in April, when the Fed began to hike last year.
What would happen to the dollar yen if the Bank of Japan were to bring their benchmark rate up from negative 0.1% to 0? If they started raising rates, what would that do, you think, to the dollar yen?
Oh, I would imagine it would roll over.
Okay.
Yeah, absolutely.
But they've maintained their negative interest rate policy for what, a year or two at this point? So
yeah, they want to keep it around 0. So yeah.
All right. Do we have any final thoughts, final charts for us?
Final thoughts on the charts?
Yeah, final thoughts on the yen or anything.
Keep your eye on the dollar yen. Keep your eye on the dollar yen. Keep your eye on the dollar index. Looks like it wants to break out today. Where the dollar goes, risk assets, in terms of risk assets, talk about global equities, probably heading the opposite direction.
Yeah. All right. We haven't talked Forex on this show for a while, so that was fun. If you want more Forex in your life and you want more of Ian's chart, Ian's analysis, the best way to do that is to get to join All Star Charts Premium, which you can do by joining the link at the description. It's right in the top there below the video on YouTube. You'll get all of Ian's charts. You get his gold report he does every week. You get access to Ian to ask him questions whenever you want, really, day or night. He's always available. Right, Ian? Yes,
sir.
Of course. That's what we got. So TBD on what the FICC for Friday. If we do have it, it'll be Ian flying solo. So if I don't see you guys then, I'll see you next week. We do have Hot Corner coming up in a little bit here. I think may start around 10-15 minutes late, so maybe like 1:15 Eastern time here for Hot Corner with Steve Straza. And Ian, thanks as always. Good stuff. And we'll see you guys later. Go make some money. Watch the yen.
Right. Have a great day, everybody. Thanks for watching.